think the focus area is to continue the way we have been executing our project, building the capacities and the capabilities. At the same time, to get future ready also in terms of deliverables, whether it is related to people, whether it is related to the skill set and talent, and also in terms of the effective and cost-effective execution of the ongoing projects. To understand what we have earlier said, our strategy 2.0, reaching 20 gigawatt by FY30, to ensure that we are well ahead of time, we achieve that number.
Looks like you're likely to achieve ahead of time?
Yes, definitely, because if you remember, when we announced 20 gigawatt by FY30, it was in two phases.
Correct.
The phase one was to reach 10 gigawatt by FY25, the fiscal which has just started. And previous year we have just ended at 7.2 gigawatt. And with the amount of work which is already in progress, we are quite confident that we'll be reaching or slightly exceeding the 10 gigawatt number by FY20. And then in phase two, we had said to add another 10 gigawatt by FY20. But seeing the way the India as an economy has been performing, the entire world is looking towards India, and the way the power demand driven by the manufacturing growth, the rate of urbanization and infra push, which we are seeing the growth, we are quite confident that our target of reaching 20 gigawatt by FY20 will be accelerated, and we are quite confident that we'll be achieving that for few years earlier only. And this QIP raise is definitely going to be a major enabler for us to accelerate this growth.
Okay, so not just FY30, but even before that, that's the target. And maybe shortly we'll be talking about strategy 3.0 as well, the pace that you guys are growing. But let me get Pritesh also in the conversation. QIP, that has been the latest event, right? And it was a large QIP at 5,000 crore. Large amount of subscription as well, but help us understand the need of it. Are you looking at just repaying the debt? Because debt was pretty comfortable for you. What was the need of probably making this large QIP at this point of time?
So you're right. I mean, to put this into context, let's keep the fundraise aside. What was our spending capacity? Let's first try and decode that, right? On an average, we are generating free cash of between 3 to 3,500 crores. You can lever that 3:1. So we have a spending power of between 12 to 15,000 crores every year. You know, this was a guidance that we have been consistently talking about for the last few quarters of the annual capex plan, right? Now, what this additional 5,000 crores does is that it gives me an additional 20,000 crore spending power as a one time over and above the 12 to 15,000 crore recurring, which will be increasing progressively as the new projects get commissioned. The free cash generation will be inching up, right? So the issue is why, to come specifically to your question, I think there were two primary reasons to do this. One was to, of course, build the war chest. Sharad has already talked about that the opportunity set has increased. I mean, to put things into context, in the last two fiscal years, meaning fiscal 2022 and fiscal 2023 combined, the annual amount of tendering for RE capacity that happened for 2 years combined was about 20 gigawatt. The year that just ended in March 24, the annual amount of tendering that happened was 50 gigawatt. So what tendered in two cumulative years of 22 and 23, 2.5 times that got tendered in this year alone. And going forward, every year, MNRE is saying they will do 50 gigawatt of tendering. So one is the opportunity set from an organic demand growth is much higher, right? Hence the room to accelerate growth that Sharad was talking about. Over and above organic growth, a lot of inorganic opportunities are also there. You know, you would recall we acquired a large platform last year, 1.5 gigawatt of Maitra. Right now, as we are speaking, there is between 10 to 15 gigawatt of various RE platforms backed by financial sponsors, which are either already running a process or about to launch a process because the fund lives of the principal sponsors are coming to an end. So looking at the opportunity set, both organic and inorganic, yes, there is a room to accelerate growth. This was one opportunity. Second reason was this, that, you know, in our extensive engagement with institutional investors in the last year or so, I've seen a lot of feedback that, look, you know, you guys are doing an amazing job. JSW is clear outlier in terms of execution efficiency, but you have a very low free float, and hence liquidity is not there. So strategic intent was also to create a liquidity event to get some very high quality blue chip global investors in the cap table who can be your long-term partners for success. So these were the two primary objectives.
But if there's so much interest, why price the QIP so attractively? It was done at what, $485 a piece,
That's right.
while the current market price is 600. Explain me the rationale there.
So very good question. You know, I am to see a data, but it is very rare to see the stock price going up by 20% after the QIP book is launched.
And after such a large QIP with 6-7% dilution.
Exactly, because pricing was done with reference to the SEBI flow price, which was determined as of last Monday, right, which was 510 rupees. On that day, the closing price was about 520, 525 thereabouts, if I'm not wrong. So it was not a very wide discount with respect to the flow price and the spot price. But the fact that the stock has gone up by almost 20% since then is making it look much more. The second thing is this, that if you look at JSW's track record of, doing primary capital raise, we've always left some money on the table for investors to also be happy, so that it should be a win-win for everyone. So to attract very large quality, good names and, to get this kind of a response was also driven by the fact of where it was priced, so.
Okay, so attractive price, yes.
This what Pritesh is saying, like we all know that it is 3.2x.
Subscribed.
Oversubscription was there. And a lot of investors who have got through primary have also gone into the secondary.
Yeah.
They were not, which clearly shows their confidence also on the company's profile and the execution and the deliverables. So that also shows the confidence, which gives us also a lot of confidence.
The JSW Group also has aspirations for electric vehicles, right? That's been talked about. What kind of role JSW Energy will play in it?
Yeah. See, a very good question. We have been discussing on this. See, with our group company entering into the EV space, I think again there also one of the major cost is the battery storage.
Correct.
So as we have already announced that we will be going, we are looking maybe finalizing a technology partner to set up a battery storage plant for the requirement in the EV space, as well as in the battery energy storage space also for us, for the from the power point of view. So we are already working on setting up a 10 gigawatt hour capacity in India for our own captive requirements, and if the opportunity comes even in the marketplace also.
Okay.
So we are actively
evaluating that.
Yeah, because looks like if things go this way, there would be huge opportunity from external players as well. So that's really interesting. But I just wanted to come back to the point of QIP, Pritesh. Why not divest perhaps at NEO level? Because that too was talked about at some point of time, and there's huge amount of interest at the renewable level as well. Why not look at unlocking value there versus the company? So,
if you recall what we have consistently been articulating to the markets, in the last 1 year or so, we've got this question times from different types of stakeholders, and we've consistently maintained that, look, whatever we will do at a certain point of time will be the option that is the most value accretive from the shareholders' point of view. So, in preparation of that, 2 years ago, we reviewed our corporate holding structure, created this vehicle NEO, and it was a monetization opportunity, which still exists, by the way, right? But the issue is this, that, for the other reason that I mentioned, that how do you get large global blue chip, investors into your cap table, so that was also an important consideration. So JSW NEO continues to be 100% sub of JSW Energy, and in future, who knows, a few years down the line, there's an option to monetize there. We will actively look at that. But from a capital point of view, what we needed in the here and now is already solved for. And hence, I would say that question is a bit premature at this point.
Is it only here now, or at least next 3 to 5 years, or are you going to perhaps go to the market again? What?
No, it will depend on the size of the opportunity, right? I mean, the idea is not to have a negative carry by just keeping a large cash chest idle on the book, right? So the deployment opportunities have to be there. I think it is reasonable to expect that with such a large capital raise, at least for the next couple of years or so, we are sorted. right?
But he did hint that there is perhaps some inorganic growth opportunities as well. Actively considering that we can probably hear about in recent times, or what would be the scale and size, or which medium are you looking at? Some hints there?
We actually, not to name any, this is a continuous process. Lot of opportunities are there in the market space. We keep evaluating on various parameters. Ultimately, it depends on the value and what returns I'm getting, because we don't compare with a standard project cost of building a greenfield, because we have our strength of executing the project fast, executing at the best, one of the lowest cost project execution. We benchmark ourselves with that and then compare the opportunities. But definitely, as we had acquired Maitra a year and a half back, which was a good asset to acquire, which enabled us to even build the capability also, because we had, as you said some time back, we entered into this space. So that has really helped us in fastening our process of having the right skill set required in this space. So we keep evaluating, and we will keep evaluating, depends on the value and the returns, because it had its own advantages also. If a running asset I am start getting the cash immediately from those assets, so that is a inherent advantage of any such acquisition. So we are evaluating, and as and when any opportunity looks attractive, we'll definitely be keen. And this QIP fundraise will definitely, as further strengthen our to look for the